Let's take a look at the chart, right? And see if we can understand the supply and demand thing just by looking at the chart, right? So no indicators, nothing, just a raw chart. And we're currently on the 15-minute time frame, right? So let's just randomly find some area that we can take a look at. Why not? Because we can. Alright, so I'm basically at the end of my chart here. And let me just zoom into right here. So basically, as I explained to you guys before, supply and demand, right? It simply means where there's movement in the market, right? So when it is that we look right here on this chart, we see where the price is currently going up. So you can take a quick look, or we can see ourselves price going up right in this small zone, right? It's going up. We can see this clearly, like extremely clear as day. We can see this right here. So price is going up. So what we need to do is to highlight the previous zone. So it's going up. It's moving from this area. Price came, made a high here, and then it retraced back down to this zone. But it didn't pass this previous low, right? It didn't pass this previous low. So price did not break this low. It came right here, it retested the zone, and then it shut off. Now this would be a demand zone. Why would this be a demand zone? Because price came down, right? So it came from a selling position, it consolidated here, and then it shot up, right? And then it came back here. So this would be a low, right? Price came up, it came back here, it consolidated, and then it shot up. So this would be considered a change of character or a breaker block, depending on the school of thought that you're looking at it from. Breaker block is a ICT SMC concept, but it's basically a change of character or a change of structure, break of structure, right? So it came, it retested this zone. This would be the demand zone, and then afterwards, price broke this high. So something to remember when it comes to trading, right? When it is you have a trending market, for selling markets, right, you look for lower highs, lower lows. For buying markets, you look for higher highs, higher lows. So right here, the market seemed to be selling. It came, and then you had a small move. It didn't break the previous high. So we had assumed that it's still in a selling market. But then we watched the market and we saw consolidation here. It didn't break the previous low. So we're watching to see what the next step is. But it broke the previous high, and then it retests that area right here, right? So this would be a new order zone. Price consolidated, left this order block or this consolidation range, right? And then it came up. So this trading range right in between here was left. It came up and then it retests this range right here. So I could just mark it out so you guys can see exactly what I'm talking about right here. And then price came back and it tapped right in. So this is the essence of a demand zone, right? So as we explained before, there's high demand, which means there's high buying pressure in the market basically. So price came back here, it didn't break the previous zone, which showed that there's willingness for price to go further. It did break the previous high, and then it came back and it still did not break the previous low, right? So you have one, two lows that have not been violated. It came, respected that area. So the expectation would be that price would be going up, and it did go up. Now price shot up, and then from right here, we see where it formed a new zone. So this is a new demand zone. And this is all taking place on a 15-minute time frame. But keep in mind, this can be done on any time frame, monthly, weekly, daily, 4 hour, 1 hour, 15, 5, 1 minute. It doesn't really matter the time frame. You just have to keep in mind, the higher the time frame, the longer the wait. So if you're a position trader who holds trade for years, you know, you're rich, you have like billions of dollars that you'd like to spend, then cool, right? You can track the market and wait for these ideal positions if you're a day trader or maybe a swing trader holding for days. You trade on the 4 hourly time frame. You use that as your main time frame, or maybe even the 1 hour, maybe the daily. You're an intraday trader, maybe the 1 hour, maybe 15 minute thereabout, maybe 4 hour, scalp and all of that. So it depends on your trading technique. And then look right here. So price came back right here, as we said, it formed a new order block, right? If you go on a higher time frame, you'd see that this area is an order block, a small consolidation right here, and a change of character. If you really look, you see where it came here. It came up and made a small move and came back and retest this demand zone on a smaller time frame, right? Which would be an order block as well. Then it came up, all right? So it broke structure here, came up, and then it started to change character. But even though it changed character, you would not just look to enter a sell right here, because remember, from down here, it already showed us that price has the willingness to go higher. So we wouldn't be looking for sells right here. We'd be looking to see if it is that it respects this zone, to see if we could get into a buy right here. And what did it do? It came right here and it respect the zone, like, to put it simple, right? And this is a demand zone in the purest form, demand. It came and it respected this zone. Now price came here, it retest, right? Some people would have risked it here. If it is that they didn't get the entry here, they would have risked it. It respected, it consolidated, it went up, but some persons wouldn't have taken this because it's still within this range. So from this high to this low, it's a range. What you want to look for is for the range to be broken. Once it is that the range is broken, or from this high to this low, so once it is that the range has been broken, that's when you can look to take an entry. So it all depends on your trading style. So some persons would have taken it here, but most persons would have waited here or right here, because this came back and it retested this zone as well as this zone. So these two supply areas were basically retested, right? So it came, tapped into this demand zone, pushed up, and then it came and it tapped into this supply zone. So this was a breaker block basically, and then it pushed off from this supply zone. So it came back into the order block areas. And then right here, it came, it consolidated, it retested this higher zone here. Right? But this is all demand. So it came back into the demand zone, came back into the demand zone, and then it pushed off. Right? Like, that's the basic understanding of what a demand is. And we basically see the same thing going on for here. Like, it goes straight up. And what you can also do is to draw a trend line, because trend lines are accurate. It's just a matter of how you choose to use your trend lines. A lot of people think that they can just get up and trade trend lines like that, but no, that's not how this thing works. You don't just get up and say, oh, I'm going to trade a trend line. You have to literally understand what you're doing. You have to understand that you're not trading the trend line, you're just using it as a support and resistance zone, right? And that's also something that we'll have to look at as well, because supply and demand, it's basically similar to support and resistance, somewhat different but somewhat similar. So everything goes hand in hand. And as we can see here, it respects the trend line. So we can just take a look at this and we can see it comes up, comes down, comes up, comes down. Yeah, it broke the trend line slightly, but then it came back into character and it went up. And if it is that we really go ahead and take a look at this, we can see it. We can see overall that it basically followed the trend line up until this point, right? Until it broke, and then it gave a retest, a slight retest right here. So it gave a slight retest right here, broke the trend line, gave a slight retest. So trend lines are something that you can make use of as well, because they play a very integral role in your trading process. they really can help you to like pinpoint the market. You just want to make sure that you understand you're not trading the trend lines, right? You're using the trend lines as context clues, as confirmation for entries, right? As confluences, right? Alongside your different confluences that you'd use. So let me go ahead and just clear this, take all of this off. And then let's see if we can actually do this for supply zones. Right, so we took a look at the demand zones there. Let's see if we can do this for supply zones. Let me go ahead and find the market area here. Right, and we have to keep in mind that supply and demand zones won't always be like that clean, right? Sometimes it will be very messy. Like let's take a look right here, for example. So sometimes it will be very messy, and you just have to know what to look out for, how to look out for it, and all of that. So right here, for example, right, you can see price came here, price came down, right? Remember, this is a 15-minute time frame. So the best thing to do is to look for your point of interest and your trades on higher time frames, right? It's okay if you want to trade on a 1 minute, but it's harder to trade on the lower time frames because there's a lot more noise on those time frames, right? But it gives you quicker moves. So if it is that you know what you're doing, you can trade on the lower time frames. It doesn't really matter. And I'll go ahead and go to the 1 minute time frame to show you as well that these moves, and I'll go ahead and go to the 1 minute time frame as well to show you that these moves also play out on the lower time frame. So it doesn't really matter. But look, so supply zone, price came, right? Price retested this area, this order block here. And what happened? It broke down, came back. So this supply zone slash order block right here was retested right here. Price broke structure. So let's see if we can mark this out. And price literally broke structure. So this would be the supply zone. And as we can see right here, price came down. It retested, it came down, and it broke structure right here. So price broke structure right here. This was the previous low. It came up, it didn't break the previous high, and then it came and broke the previous low. So that's a change of character there. And then it came back into this zone to retest this order block. It took out this previous formation, so the previous high here. You can say it took it out, or you can argue that it basically created a double top. So it respected this zone basically. It didn't break the original high that was made, the original supply zone that was made. It respected this area and it tapped back into this previous zone right here, right? And what happened after it did that? We can see price came down. Now it didn't break this zone, right? It consolidated a bit. But if it is that you were a scalper, you could have entered right here. Literally, you could have entered right here upon this break, and you could have got something down to this point if it is that you were just scalping the market. And even right here, like this came up and then you watched it started to break down. You could have entered right here, put your stop loss above this high, and just waited, right? And then once you were in profit, you could have moved your stop loss to break even just to secure yourself, right? But let's take a look and see what happened here. So zoomed out, price came, it actually retest this area. So these are all supply zones. So as you can see, price came up, then it fell. So this is a supply zone as well. Price came up, then it fell. This is a supply zone as well. Maybe on the lower time frames, but they're still supply zones nonetheless. So wherever you see price make an impulsive move and comes back to cover that move, right? That's a supply zone, right? Wherever it is, price makes an impulsive move, comes back to cover that move, whether fully or slightly, that's a supply or demand zone, I should say. And as we can see right here, this high was respected. if it is that we decide to draw this out, we see this wholeheartedly. Once price fell from here, right? Let's say you got this trade, your stop loss above here or above the previous high. Price did not come back into this zone, so you'd literally be secured. And price came all the way down, and these are smaller demand zones, and well, sorry, these are smaller supply zones because we're in a downward market in this small segment, so we're looking at that. And price came down, broke structure, it came back, retest this zone, played out. You could have gotten your entry anywhere around here, came back, it retest, stop loss would have been here, and then it fell, right? And then from right here, you see where price basically changed character. But this is to basically show you that it literally works. It literally works. You just have to know what you're looking out for and understand the most important rule of trading, which is psychology, right? Once it is your psychology is right, you have nothing to fear. Let's go down to a lower time frame. Let's try maybe the 5-minute time frame, for example, right? Let's try the 5-minute time frame, because literally it's the same thing on every time frame. So on the on the 5-minute time frame, so this, as we can see right here on the 5-minute time frame, this is the previous high, or this is the high, this is the low, highest high, highest low of this range, of this point. So this would be a range, right, where price moved from the lowest point to the highest point before starting to break down. And within this range, we can see this is a 5-minute. So it's literally the same thing. I'm just showing you how it looks on the lower time frames. But it's literally the same concept. Nothing different, nothing changed. Look here. Look at this. Just look at this. Like, it's that simple. The only thing you need is patience, right? And you have to understand that it won't always play out, but you want to find the best possible areas or points of interest for your trade. You don't want to just jump in. A lot of persons who are young traders, new traders, inexperienced, what they would have done, price came up. Let's say they were telling themselves that they're trading supply and demand. It would come into this demand zone, and then they would take this trade. Nothing's wrong with that. But as you can see, this isn't ample movement because there's a lot of liquidity here, right? There's a big impulsive move here, impulsive moves here. So it would be more, you can say, convenient to think that price would actually come down to take out liquidity right here to cover back these impulsive moves, because normally when price makes an impulsive move, it comes back to take it out because there's a lot of orders here, and the bankers and the market movers, they want to make sure that they can capitalize as much. So for the persons who have their stop losses here, it would come back to take these stop losses out, maybe down to this point, right? And look, they would enter here, put their stop losses maybe down here, a lot of them, and this would be a bad risk to reward ratio, right? Because they would go ahead and they would maybe put their take profits up here, thinking that it would come, or maybe even up here at the highest point, right? Not analyzing the market, not taking the time out to understand the market and how the market's moving. And then it would just come here, and then it would come down. They would be holding, they'd be saying, oh no, it's going up, it's going up. And then they're basically in drawdown, they're basically losing, they're in reds, minus, right? So they're in total reds, and then it comes down here, boom, right? Well, maybe they would be somewhat lucky if it is that they had a strong account, because this is where price actually came before it started to go. But for most persons, they don't have that of a strong account, right? And they don't understand how to leverage their account, how to use their stop losses, how it is to utilize their lot sizes, how it is to utilize their lot sizes. They literally don't know, so they would lose, right? But let's say you decided to wait you identify that this is the point of origin. So price came down here impulsively, made this impulsive move up, and you saw all of these impulses right here. Okay, fair value gaps. You saw all of these. Yeah, so all of these fair value gaps here, you saw all of these impulsive moves. You said, all right, let's wait to see what happened, because patience is the name of the game. You saw this, you wanted to enter, but you said, no, let's wait. And price came up, you got anxious and you said, oh man, I should have entered this trade, but you decided to wait, and then price started to fall and you say, whoa, it's a good thing I didn't enter. And then boom, price falls here, right? So it taps right into the zone, right? Barely taps into the zone. Then it pushes up. Just look, then it pushes up. Then it retests and starts to push off. You could have entered here, right, if you wanted. But as I said before, the best option would have been to wait for a break of structure, break and retest. So what happened, if you wanted, you could have entered here, right? It started to push off, maybe even right here when it retests this area, break of block. But then it came up and it pushed down and came back into this new zone that was formed right here. So as you see, this new zone was formed. As you see, this new zone was formed, and price came right here and tapped into this zone right here, and this would be an entry. And then you entered from right here. Look what happened. And this is your demand zone. This is a 5-minute chart, and it came up right now. When it came down and you saw this retest and it started, bro, you could have closed it here, because you saw that price was showing willingness to go lower. It didn't break this high. It started to come down. You could have closed it somewhere about here, right? And you would have had that scalp. You would have had that trade, right? You can call it a scalp or intraday trade depending, but you basically would have that trade. It's very simple. It's that simple, and it's literally the same thing over here as well. So this is the highest point in this market, right? This is the highest point in this market. As we can see here, price came down and it retests this zone. You could have entered here, right? Nothing's wrong with entering here. You could have, but you'd want to wait to see some form of break and retest. That would be the best choice. But if it is that you saw this, you could have entered, because right here, price came, made this low, and then it came up and it broke this low. So you could have said, oh, this was a break of structure, and then it retested, and then you could have drawn your point of interest right here from this low, from this previous low, right? And what happened? Price came in perfectly and then it fell, like literally. But then you could have waited, right? Because as you say, trading, it's all about patience. You don't have to rush trading. Literally, you don't, right? So let's say you drew your line here and price came in, as we said, it came and it broke the structure. So you got a definite confirmation that that structure was broken, because it could have come here and it could have just shot up, tapped into this fair value gap area, right? This impulsive move, and then it just shot up. Anything could have happened. But now you got a lower low, you got a break of structure, and then it retests this break of structure, right? Where it is that you have this impulsive move, impulsive area, because this impulsive move came down, it was covered by this, and then this impulsive move, it came back, and it retest, consolidated, and it broke down, and you could have entered anywhere along here. And then if it is that you had entered, price would have been falling, and it's the same thing here. Look, price came down impulsively, it came back, tapped into this zone. As you can see, there was a low that was made here, then an impulsive move up. Boom. Where do you think come? Simple. Price stopped in, price dropped, and price fell. Price came up. Now, right here, there are smaller moves here, right? Smaller supply zones right here. In a case like this, right, I would recommend that you basically wait, but then it depends on you when you're trading, right? Because you could have used Like the RSI, for example, you saw this impulsive move, it tapped into the oversold region or overbought region, and then you look for displacement and you entered, right? Or you could have gone ahead and marked out this area here. You saw it came up to this supply zone right here, it started to displace and you entered. But then a lot of persons would say, or a lot of experienced traders would say, there is no prominent supply zones here, right? So it didn't come back into this prominent area where there was a big impulse to cover these impulsive moves. So you basically wait. So it all depends on the way how you choose to trade. But I'm just here to show you that it literally works on every time frame. It's the same thing here. Price comes down. You see this consolidation here. This is a supply area. Order block on higher time frame. It impulsively came down. It took out liquidity here, came up and it tapped into this zone, right? So this range, it basically respected this range and it started to fall. And price came all the way down. So it's not that difficult, guys. It's just a matter of understanding the market. And let's go to the 1 minute time frame. All right, we're sticking. So this is the 1 minute time frame. Now this would be a scalp. Like this would definitely be a scalp, right? I'm looking at this right here, right here. Like I don't even have to go that far. This is the end of my chart. Like literally, this is the end of my chart, as you can see, right? And looking at the chart, this is exactly what I'm seeing. This is a supply zone. This is a supply zone. As we saw in the higher time frame, the price is going down. It's the same chart, nothing changed. I'm just showing you that on the lower time frame, you also have these movements, but there are a lot more movements. So you have to be very precise and you have to be willing to stop and watch. But look, price came down impulsively and it retraced back to this zone, tapped into this order block here, or if you want to say tapped into the supply zone, tapped into the consolidation, whatever you want to call it, right? But it tapped back into this zone, this retracement area right here. And what happened? It fell. This would have been a scalp. Evidently the chart isn't showing any other moves, so we don't know what happened afterwards, but this would have been a scalp. And you could have easily gotten this scalp. Right, we can even take it a step further. We can go back up and just go back into the market. So price came here, retest, came up, dropped, it came up, it tapped into this zone. So as you can see from right here, double bottom, price came up, it dropped impulsively, it came back up and tapped into this area, right? It may be a small tap, but it tapped into this area and then it fell. This is literally the 1 minute. I don't recommend you guys to trade on the 1 minute time frame unless you're really experienced and know what you're looking for, but it can be done. You just have to be very patient and understand what you're doing. It's the same thing here. Price came down impulsively. As you can see, price came here and then it made a low here, impulsively pushed up. It came back down and then it came and tapped into this area right here, tapped into the supply zone and then it fell. So it all comes down and we can even see it from the opposite perspective instead of just looking at it one way. Price came down, price came back, tapped into this demand zone, right? Price came up, boom, down, tapped into this demand zone, shut off, right? But these will be scalps, so you really have to know what you're doing. When it is that you're trading on the 1 minute time frame, 2 minute, 3 minute, you're not looking for longer trades, right? That's the reason I say the best option would be to go to the higher time frames, use it as your bias, and then you trade from the higher time frames down. But this is just to show you that supply and demand works. And it's not difficult to understand, it's not difficult to grasp. You just have to take your time to understand it, test it out, implement it, right? But it definitely works. So anyway, peeps, yeah man, that's it for me. And look out for the next video. As I said, there's a lot that we're going to talk about, right? There's a lot of information that needs to be disseminated. So you guys can definitely look out for further videos on my channel. Like, subscribe, and share, to your friends. Anybody who want to take on trading, who wants to start trading, maybe for fun, for a second source of income, or just to learn a new skill, they can definitely try this. So go ahead and just share the information. Peeps, rebelside.fx, I'm out.